Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for coming by. Could I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thanks, Marty. And how we doing in YouTube this morning? Hope you're all doing well. Thanks for visiting the Trader Lab. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades, and these are available to everyone at no cost in the Bookmap Discord Trader Lab. Trader Lab is a community of like-minded traders that come together to leverage their collective experience. We have our senior trader has over 50 years that he admits to. I've got 46, both professionally and otherwise, out here with you, and we have the full range of traders from newer developing traders and, of course, old dogs. The idea of the Trader Lab and the reason I created it was to help traders understand the business of trading. Why does the market do what it does? How might you get in alignment with it? And how can you build out a business plan with the objective of sustainability and creating a career path? Most of us come into the business thinking it's a video game. And that even though we all have winning trades, the same as in the casinos, the gamblers all have winning hands. In the end, it is the casino who extracts the dollars from the gamblers. Now, that's a business model that is proven, successful, and has longevity. What do casinos do that gamblers don't? Casinos only play games that have a statistical edge that favors them. It's called an edge. Gamblers are, well, gamblers, and they have fun and it's entertainment. Now, you have to make a decision, in my opinion, whether you're here for the entertainment, the dopamine, the ego gratification, the gambling, or if you're here for the business. And if you're interested in the business, that's why I created Trader Lab. Most of us all have done the same thing. In fact, we all have. We've all walked in your shoes. The difference is, can you learn or do you keep waking up in the same place? I call that Trader Groundhog Day. Working hard, random winners, no edge. And the fact that you have winning trades has nothing to do with sustainability. Gamblers have winning hands. So which are you? Are you sitting on the gambler side of the table or you're sitting on the house? And if you're interested in learning about the business, then I invite you to Trader Lab. You can use the link in the bottom of YouTube. Let's move on. We got a lot to talk about, right? General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. However, you can come to the Trader Lab and learn ideas, structured trades, and then kind of cobble it into something that you can relate to. There isn't one way to trade. So don't think that there's like a rigid process. What there is learning how the market works. And if you can get a better understanding of market mechanics, then you can define conditions and align specific trades that you've vetted that have an edge. And then, of course, you're going to take stops like the rest of us. Every business has overhead and costs of production. Did you think you'd actually have the ability to own a business and not pay bills? By the way, we always talk about trade plans and edge. Here's something you might want to check out, and it's available to all of you. It's called Bruce's Pilot Program. Now, I suspect it will not continue as a pilot program because we've been getting some decent feedback on this. It's something you might want to check out. It's what is a trading edge and how do you get one? Because anyone can talk about an edge, but most traders are too busy pushing the button and responding to FOMO than they are about taking a look at this as a development process, learning to trade, and then building a foundation and putting the pieces together to create sustainability. We're just too lazy, right? Well, if you need some assistance with that, there are tools inside of Bookmap that come with Bookmap on analyzing, extracting data, determining if you have an edge, and there's a lot more. So many tools in Bookmap, and I certainly don't have the time to go over them, but you should go to bookmap.com. You should check out the knowledge base, check out the product, check out the tools. There's more tools than you know what to do with. The thing is, it's not all the tools. It's the ones that give you an edge. And Bruce's pilot program uses some of these tools to help you determine where should you interact and where should you just sit back and be a tourist. And as far as that that goes. Here's something else for you. I created these many years ago. There's 60 PDFs of structured trades that I've shared, and these are available to you at no cost in the Bookmap Discard Trader Lab, as well as a library of webinars and the community itself. There's 60 of these, and this is not a trading course. I'm not a vendor. I'm just like you. The only difference is 46 years. So with 46 years, you pick up a few ideas and you discard most of them. So here's some ideas, and you have to reverse engineer each one. There is no plug and play in trading. And I know, plug and play. This is not download a piece of software, install it, and then move the ATM in the basement. If it was like that, the failure rate for retail traders wouldn't be horrendous. So why is it? Are you doing what they do? And if you are, maybe it's not realistic to anticipate a different outcome. This is an intermediate time frame chart. I think we can agree that the higher time frame is up. This is the all-time high. It is a weak high. You know, double tops. What's a double top? Exhaustive. Not a top. Weak. So what is the trend? Up. Now, what is this all about? What does the market do? The market goes up to go down. Notice the tail here and the tail there. What creates the tail? The market went down. The buyer said, oh, thank you, it's on sale. What happened here? When the market went up in this leg, sell stops, sell stops, sell stops, right? And of course, sell stops. So what happens to these longs? Thanks for playing. They get a coupon to the buffet. You know, go to casino, get the coupon and a couple cocktails. Sell stops under here. Buyers are in here. Take this low out, come down here, take this low out, come down here, take this low out. We're out of here. Oops, too low. Then what? This is a high volume area. Think shopping. You know, if you know how to shop, you know how to trade. You just have to adapt to from a slow boat like your supermarket to the Audubon or the Indy 500, if you know what that is, or Le Mans. That's where we are. It's changing every second. In your store, it doesn't change much, right? So this is a retail price, high volume. Remember shopping, too low. What happens here? Well, if that's too low, then what? Going up, where's the stops? The shorts that are in here. Where'd we go day before yesterday? Pick the shorts off and then come back to what? The retail price, too low. What did we do yesterday? Well, we open, we go up, we come down to what? Too low. Get the stops out. If we get the stops and we don't get more sellers, then what? North. Now, nobody, going north yesterday for me, that was a surprise at the end of the day, but that's okay. This is trading. Doesn't matter. Then what? Target. Yesterday's target, and if you follow the stream, I don't know if we hit it yesterday at the stream, but this is all on the price map, 41.5, 42. Let's look at it from another angle. This is yesterday. So the day that we went down, I just want you to see the auction so you can understand. Well, I don't have it here. The stops were here, and 30 was something called a single. That was the target for shorts. And we came down to the retail price in here. So too low, too high. So in the morning, it was a short, and that was the target. Let's look at yesterday. So that was the single. Now, the next one is over here. In fact, this day, I remember I was long, and I was going for this, and the next target was this. So we only got there. Then it turned it around. It's like turning a barge around and then get short. I think that was the way it went. I don't remember, but these were the targets. Then yesterday, where did we go? Well, first of all, we started out, we came down, and where are the stops? Under day before yesterday's low. That's an inventory grab. And 95 is a key level. Let me bring you again back to the higher time frame. Or 97, 95, 97. That's by retail price. So now there's no precision. Think horseshoes and hand grenades. There it is. Take out. And the low of this day is here. I don't remember the statistics. I don't have it in front of me. Basically, a high probability to check that low. Get under there. No more selling. What does that do? come back around, and then the shorts that were in here from here get taken out. Where was the next target there? That was like the end of the day. Okay, this is the auction, guys. This is how it works. Now let's look at another little piece. Now, yesterday, 03-ish is the naked volume point of control. What that means, retail price highest volume from yesterday. And yesterday we closed up in here. 67.18 was an important level in yesterday's RTH. So, but then what happens? Well, we come lower in the ETH. It's like, what's going on? You're asking me, what's going on? I'm saying, what's going on? So let's look at some of these levels now. I got to turn off some investor RT levels. Hold on one second, guys. Investor RT is my higher time frame platform, and it exports levels to Bookmap. Very cool, in real time. So these are all automatically updated, and these are the low volume nodes, high volume nodes. So all those will disappear. The out here is what's the higher time frame. I do these manually, and in here are custom notes that I actually put in as the market develops. Let's go back and look at some levels. Let me just try to find this out here. Okay. Whoop, MCLVN 79. Oops. Where'd that level come from? Uh-oh. 79.25 is an outside edge. It's right there. This is multiple time frames, guys. So don't throw a shoe at the monitor or me. Now, nobody knows, right? Anything. So let's assume we know we don't know. That's the first important thing. But what can we learn from the behavior in the auction? Because remember, this is shopping, guys. What's too low? What's too high? Yesterday's high. What's too high? Notice the symmetry. I'm not paying that. Yeah, but it's on sale. Too low. And what's the fair price? 12. So support-ish. Remember, these are levels, not walls. 79.25. So I go out here this morning. I'm going, where the heck? What is going on? Oh, 79.25 ETH low. That right there gives me insight that most other retail traders have no idea, because they're all stuck on their indicators. They don't understand this is not a business of indicators. This is a business of participant behavior and pricing. Why do we even have a market? It's the idea of having a market is to figure out what's too high, what's too low, what's fair. And the market's always going to try to figure that out. And it doesn't know naturally. So we're trying to figure it out also. But our job is to get in alignment. So if this is the outside edge, I already know when I'm coming in to trade the RTH that this is my outside. I have yesterday's low. Okay. I have the naked volume point of control. Let me translate. Retail price from yesterday at 12.5. Back to the higher time frame, guys. I hope you get something out of this. The reason I spend time doing this is what a trade plan is about. This is about understanding market mechanics. Remember I said, how does the market work? Why does it do what it does? How can you get in alignment with it? This is all prior to the RTH open. This is the work. This is the plan. And then it's alignment with structured trades. 12 is the retail price, but too low. Fair price in the higher time frame. From this swing low to the all-time high, that's the highest volume. Think shopping. Too high, too low in this distribution of volume. I'm not paying that. What happens is the buying dries up. Yeah, but it's on sale in the ETH. The selling dries up. And the fair price is around 12 in this. Then if I go higher, I have the all-time high. Why did we fall off here? We ran out of buyers. We certainly didn't find, and we got profit taking and with throwing the weak longs under the bus. You see how it works? Now we got our fuel to go higher because we got our shorts in here, and then the buyers are here, the buyers are here, the buyers are here. Take the buy stops out, and then rotate and go for the weak longs. The week longs have their stops under here. Take them out. Come down here. Get shorts in the ETH, and now the fuel exists to come across, take out this high, get through this, and then hasta la vista. We'll see you later. I'll send you a postcard from the edge. This is how the market works. Not saying it's predictable. It certainly isn't. But if you understand market mechanics, which is what the Trader Lab's about, you might, if you do the work, separate yourself from the gamblers. And that doesn't mean you'll ever succeed in the business, because if it was just that easy, I wouldn't have spent 46 years. Now, it's not that I'm still a developing trader. I'm always trying to improve. But I get by really well, actually. So let's go take a look at this. So I'm going to now show you some trades. And some of these are not, well, I'm going to stick to structured trades, okay? Let me put it that way. The ones I share in the Trader Lab. You never have to go beyond what I share in Trader Lab. You can, of course. You can bring your indicators. It doesn't matter what you do. But if you don't understand how the market works and you're depending on plug and play, I think, because we've all done it, that's not a recipe for sustainability. Not that you might not be the exception, of course. I'm not saying you won't be. It's not my job to say anything, because we're all unique. But we all believe the same things. And the problem I found for me with indicators, and I grew up on them, they were new when I started in 1980. So that was like, oh my God, look at that. An oscillator. Holy mackerel. So I was at the early thing when indicators came in. So it was a new thing. It was like, and for me, it was like science, research. Now, this is a very advanced concept I'm going to show you. And I always want to stress, the open is the last place for traders, developing traders to trade. And I'll tell you why. First of all, there's no structure. Secondly, you need to have developed unconscious consciousness and a deep understanding of market mechanics and participant behavior. You need to understand what happened in the ETH at that outside edge. And you need to understand that we have key reports coming out at 8:45 Central Time and the Big E at 9 Central Time, and we're in the midst of a government shutdown. How exciting. Logic suggests the market's not going to go up. Guess what? So what? What are we doing? We trade a plan. What is our plan based on? The participant behavior. Do you think you know everything? Well, you can't. But if we can't know everything, what can we know? We can follow the footsteps of the participants. That's what we can do. Now, I'm going to show you an opening trade. Now, I always want to say, developing traders, after you're already profitable and you have a consistent edge and you manage your psychology, you can learn this. But if you do this before you have the other pieces, it's a recipe for disaster. I do show it because I want traders to understand what they can learn. This is called VPOC migration. I made these terms up, I don't know. And I found many years ago when I learned market profile, and that's before, we had anything really. We didn't have volume. We didn't have anything. We had time. So you guys grow up with time, 30-minute bars or candles, whatever, 5-minute, and everything's time-based. Now we have order flow, and we don't need the clock anymore in the developing, quote, time frame. There is no clock here. Now, you can use whatever you want, but I kind of think of it like, I don't look at my watch and say, I can't do anything for 30 seconds, 1 minute, 2 minutes. I mean, what does that have to do with participant behavior? Absolutely nothing. So the clock, for me, I'm only talking about me, it's immaterial. What is material is the order flow. So I don't use any time-based trading. I use participant-based, the auction, the shopping. So let's go to the store together. RTH open, developing volume point of control. Now remember the higher level overview. Now let me go a little further. 12 is the high volume in the intermediate time frame. That's my retail price. I got to give you a few more pieces. This is the ETH volume point of control. I'm going down in time frame. So in other words, time, and there is time because these are fixed. They're not moving. This is real time. This is the end of an auction. This is the overnight volume point of control. It's closed. It's fixed. This is from yesterday. The naked volume point of control. It's naked because it hasn't been touched. That's the retail price. I'm opening above the retail price. I can come down and check it. I'm opening below this retail price, which is from the ETH. Sounds confusing. And this is the retail price in an intermediate time frame. So what I know is and let's look at the order flow. I got this sitting in here. I know what happened in the higher time frame. And I'm thinking, I've got these reports. I got to be pretty careful. All right. So we open here. Now I'm looking. I'm going to show you a very aggressive trade. And I have to stress, no plug and play. If you get mechanical, you're on your way out the door. Sorry, but I have to make the point because traders, they hear, but they don't listen. This is the first volume. This starts at RTH open. RTH open, it's what's happening. Now I see the volume come in. This starts at 0. So this is the session volume profile. It's going to show me all it is price and volume. Nothing fancy. But what it allows me to see is rotations, and inside of each rotation is an auction. This is an auction. Chop, chop, chop. Break low. That's resistance. If I break high, just look in the micro here. That becomes support. See it? So chop, chop, chop. Break high. New retail price. Support. See it? Resistance. Break low. Resistance. Break high. Support. What's this? Resistance. Sellers are here. Test. Break low. Okay? And this is not how you trade it. This is how you read it. So and this is advanced because this is a foreign language. So when you guys are all stuck on your indicators, it's just Google Translate, but they're dumb. They're dumb. They are only one element, and they don't mean anything other than, oh, it's a derivative of price in some fashion, right? How about if you actually can learn the language of the market and look at an order flow tool and understand what's actually going on? And of course, you have to learn it. So here's what's going on. This is the retail price in the developing time frame, if you will. And now it's going higher, but it's measuring as volume. So let's talk here. Too low, too low, too low. These are not mechanical, and it's not along yet. Buyers. So what am I saying? I'm seeing my buyers. Now what happens here? Sellers. Where's my resistance? There. Down. Where's my opening swing low? You ask. Isn't it under here? And where's my liquidity resting? Watch. Now, VPOC migration. I'm going to show you some very micro concepts here. And again, not a recommendation. I just want to show you that what I'm doing is in vertical integration of time frames. This is not complicated. I'll tell you what it is. It's random. See? That'll get your teeth to chatter. So what do I know? I know this is the opening swing low right there. Okay? So I have buyers here, resistance is there. That's the high one. Now I'm moving lower. So I'm watching here, support, very nuanced. I probably should not even go into this with you guys, but some of you will understand this and others are going to go, what's going on? You can learn what's going on if you find this interesting. Let's go. So opening swing. Now I know I have a couple possibilities. Don't forget my liquidity is here. I have a retail price from yesterday. There's a possibility I go here, and I got this, the retail price from the ETH and this. And it's what's happening. Let's see what's happening. Where's that resistance? Wasn't it there? Here, let me show you. I'm kind of doing a little something here. I don't want to spend time with this, but I just want to show you microstructure. See how it paused right here? Now let me show you the long. I took this. Let me show you where I'm going to show you. I have to go back and look at my own Bookmap. I mean, when I took it, it surprised me as much as anything else that I even took the trade. And the reason it surprised me was I'm unconsciously competent. So what surprised me about it was I actually took the trade. And because I'm very patient and I'm rather detached at this point in my experience from having to do anything. Just don't. Oh, here it is. I think. Wait. Sorry, guys. I'm scrolling back in my trading workstation here. I'm trying to find this thing because it was pretty early. Yeah, here it is. I look at these things. I'm pretty amazed myself. 6708 quarter, and it was at 44 seconds in. That's why you should not be trading this thing. Didn't remember. So let's look at the language. Too high, too low. When I break under it here, right here, I'm looking at this, okay? I break up. My resistance is here, under here. See the test? I break down. I get VPOC migration up. This is now my resistance. This is my support. So here, resistance. See the test? Support. Now, the way this works is, if this shifts up, here's what can happen. I can do that. I know. Every time I say this, you're going, oh, brilliant. It can go up or down. Yeah, but it's the behavior. And what do I know about this? Let me just draw another little line for you. Now, I'm in the micro. I don't want to stay here because this is what's so hard about the open. There's so many elements flying at you in 30 seconds. That's too high. Where's my support? Here. I get under it. So right here, no clue. Now, I'm looking, don't forget, I got in at 844 here. Resistance is here. Break low. I'm seeing absorption here. Break high. Right here. Resistance. 830 and 31 seconds. Support is here. I'm now above this. This is my support. This is my resistance. Break high. 39 seconds. Support here. 42. Long here. Then resistance is here. Pull back here. This is another long. Let me show you the next location. You can isolate this. Guys, if you're watching this and you find it interesting, notice, so this is my support. That's my resistance. You see how it works? Now, I got in at 44, clueless, you know. But this is also a long. So you had two shots at it, really. You had this, and you also have this. Different. You have this. These are all structured, and you can learn this. And then, now for me, I really only, my objective in this trade was just to go here. That was it. So scale was here, and this is because of big reports this morning, and this signal, 6718, which came from yesterday. That's all I did on the long. And then, you know, you get kind of like, oh, really? The next target is this. I was not on it. I don't mind telling you that. Now, VPOC migration. This is another structure. And this sets up a continuation long. Now, the thing to understand about this is nothing is mechanical. And we're going into big report. 8:45 and especially 9 a Central Time. By the way, let me move gotta manage my trade here. Hold on. I'm sitting long here, by the way. Not that it matters, but I'm trying to, hold on. Sorry, guys, I got to take care of business, you know. I typically don't initiate trades, very rarely when I'm going to stream, because I can't multitask and do all this very well. But if I have a trade on, then I'm just managing it. Not a recommendation, by the way. Okay, guys, sorry about that. Let me get the chats back. I just lost them. Okay. How are we doing in YouTube? Sorry, guys. By the way, if you're watching this, you get something out of it, please give a like. Hope you like it. And if you really find this interesting, come to Trader Lab. There's no quick, easy fix. Wouldn't it be nice? Let me show you microstructure. I'm going to show you some other elements. I always like to kind of mix it up a little bit. I'm also going to show you some more structured trades. Now, that trade I showed you at the open is a specialty. The last trade you ever want to take. Not the last, but I'm saying the last thing you want to mess around with, because if you can't trade the rest of the things I've shared, that's a recipe for disaster. What's the language here? Let's talk. You'll see the sellers here. Why didn't the market go down? Because there's passive buyers here. That's how order flow helps you. You have a green bubble here. Why is the market not going up? Because the sellers are here. So you have a consolidation, all right? And that's really what an auction is. If I want to look at it as a purist, what is going on in consolidations? All it is, and what this is I'm breaking this down into multiple time frames. What is this right here? This is an auction. I'm not paying that. Think about it. You're in the store. You want how much for a can of tuna? Get out of here. Oh, yeah, but it's on sale, Tom, right there. And here's the retail price right there. That little node, that's called a high volume node. I'm going to just draw a little box around this. I'm going to show you a little thing. And I'm just pulling these out of left field so you can visualize what I see but it's not so much what I see. It's the language of the participants is what we're really trading. Your indicators are just trying to, figure out what's going on. What's the language? Well, for me, let's look left. You always have to look left. So what's this? Sellers are here. Buyers are here. The buyers overwhelm the sellers. Think Pac-Man. I break high. This is support. What is support here now? There. Where do I go? North. What happens here? Sellers again. Buyers here. But this time, what happens here? Too high. Now, when I say too high, this is all in multiple time frames, but no clock. How long does it take for this to happen? As long as it takes. How long did it take for that to happen? As long as it takes. If it took this long, let me get my watch out. Am I timing this? No, I'm reading it. So here I find too high. But what do I know was too low? This. The reason this went up is because that's too low. The reason this went down is because that's too high. Support, resistance. VPOC migration. The yellow line is now the new retail price in the developing time frame. So I'm integrating multiple time frames. So this is the highest volume, the yellow line, for the day so far. And it moves around as the volume comes, moves around. This yellow line moves around. And if it moves again, it'll be a variable high volume node. But let me show you how I use it. Now, if I know, now I got a fair price, and what was below here is now too low, right? I left it. Now we're accepting this. Think of this like your store. You used to be able to buy your tuna at $1. Now tuna is $1.50. You're buying S&Ps, they raise the price, and the price is accepted. So if I break high and find too high, 1 second. If I find too high, then the market's going to rotate and go, well, what's too low? Well, if I have a new retail price and the buyers are here and on the daily time frame, now this is fair. Where's my support? Let's look. Isn't it there? Isn't it there? And where's my resistance? Isn't it here? But the trend is up. See the resistance? So there's no shorts for me. I'm not saying you can't, but and value area high has a high probability. Now there's more. Is there? Yes, there is. The ETH high has over 98% probability. You got to vet that for yourself. The first hour's high has over 98% probability. Put a helmet on. Yesterday's high which has that single. Remember the target from yesterday? High probability of going north, taking it out. There's also going to be stops on there. Thanks for playing. They get a coupon to the buffet. All-time high, and then after that, clueless. Then it's trade management, or we don't get there yet, and we rotate, and you get taken out on your trailer. Oh, I have to show you another couple trades. Sorry. Where am I? Just lost myself. Let me come back. You see, guys, this is not about frequency of trading. This is about edge and catching rotations. I'm going to show. I have to show you another trade. Completely forgot about this. 9 a.m. is the big report. Oh yeah, I got to show you this. I didn't take this one yet. It's a structured trade, so I didn't take it. I was getting asked in Trade Lab, why didn't you take that trade? I wanted the dust to settle. So I was this. Let's come back and talk the language of the market. What's this? It's the retail price. And now let's watch together very carefully. Traders in Trader Lab took this. It's a structured trade. And I said, no, I didn't take it. And they went, why didn't you take it? Well, I didn't take it because my plan is a little different than some others. And I just am very detached. I'm patient. I don't care. When I say I don't care, that's detachment. So I have this report, and this selling is liquidation ahead of the report, in my opinion. This is my new retail price. Let's look at what we know before this long sets up. And again, what do we know about here? Our retail price, right? And that's set up north. If I find too high in the shopping experience, what do I know? I know if I find too high, break low, and right here, if I can't get above, let me show you. So where's my sellers? Well, I got this comes in the book. This came in the book. Okay, so this is resistance. Let me show you a little more. If I break high and hold it, I can move higher. Here, resistance or liquidity. Let me show you the microstructure. I'm just going to show you an idea again. Now, what I'm doing here is I don't know what's going to happen. So we got to get over that concept. That doesn't exist in this business. It's like, I don't know. Might do this, might do that. I'm in the, I don't know. Do you? I don't know. So I've given up needing to know. What I know is what I can know. I can know that my sellers are here, my buyers are there, my sellers are now here, my high volume is there in this structure, my retail price. Think of this like a convenience store, multiple time frames. Break low, sell trigger. Where's my resistance? Isn't it there? See? Hasta la vista. Thanks for playing. We'll send you a coupon to the buffet. Now I have support here, but I'm going into a key report. I have a report at 8:45 and I won at 9:08. And this was too low, right? Let's mark it. Variable, high volume node. This sets up a long, and again, I didn't take it. Doesn't matter what I do. Not important. What's important is what you do. So this, already out of my long at the time, no problem. That's wonderful. Watch. Watch the behavior. Where's my support? It's here. Right there. Now, this is a structured long, if it's in your plan. And the idea of this is to come back here, here, and eventually, out the top or whatever it does. VPOC migration. Too low. What's this? New retail price. Where's resistance? Here. By the way, I took a long. Let's look a little further. What do we know about this? Too high. too high. What do I know about this? Too high. What is this concept? Resistance becomes support. This is called mean reversion. This is the long I took. I posted this in the trade lab. I was just waiting for the report. That's just me. I'm detached, guys. It's probably not what most of you feel. You do this for 46 years, you kind of get over it, you know. Just me. Doesn't mean I wouldn't take that trade. Just today. Follow my plan. And when I have reports, I get a little more patient. Resistance, right? This becomes support. Now we have another trade up here. By the way, the long I took, wherever that was, I'm going for this. Because there's over 98% probability. Same with this. So I'm going for this. And wherever yesterday's high was, which I don't remember anymore. Oh, this. I'm still in the long. So, you know. So I'm just long, long, long. So you could see them, right? VPOC migration. What does it say? The language of the market, my friends. Too low. Too high. Becomes support. Too low. What's this? Resistance, Tom. Well, what happens with resistance? Becomes support. VPOC migration. Now, right here, the possibility is, well, possibility is to come down, of course, to here, or continue up. What's the trend? North. Where do you think you might go today? Maybe new all-time high, right? Too low. What's this? Current. And what do we have? VPOC migration. What does it suggest? North. Now, let me show you another structured trade in Trade Lab. So far, I'm showing you structured trades. This is primarily what I've shared. And by the way, there's much more, but you don't need anything more, in my opinion. What you need to focus on is isolating the conditions that qualify a trade and then overcoming your fear. The fear is managed by statistical probabilities, not how you feel about it. Every time I put a trade on, I have, quote, apprehension. That means uncertainty. And the other, let's drill down, fear. So I experience fear as a response to uncertainty. Now, for many of us, if you don't have a tangible statistic, all you have is fear. If all you have is fear, then your behavior is being driven by emotions, you know, fight and flight, FOMO, looking for certainty where it doesn't exist, all this kind of stuff. So, and I like to touch on this because I'm really talking about, I think, every trader I've ever talked to that is out here, you know, off-floor traders. And that is that when we start with indicators, we're using the indicators to create certainty. So we tend to load the indicators on to squeeze the risk out to give us more certainty. Well, if you're using random inputs, the casinos don't use any random inputs. They only use anchored inputs. In my primer webinar I did, it's about 34,000 views. It's about anchored inputs. In gaming, they always play the game the same way on the casino side. The variables are the cards, right, coming out and how gamblers play the cards. So they have no control over any of that. We don't have any control over what happens in here. We only control what we do. So if we're going to play our game, and we have different games called setups, and I call them structured trades because they're dependent on structure, then we can isolate them and we can measure them. And then we know if they're qualified that over a random distribution of outcomes, if we exercise the edge with discipline, we have the opportunity in a random distribution of outcomes, to accumulate dollars from the other side. And we are still going to pay those guys. They get paid. Casinos pay them, and they give them the cocktails and ticket to the buffet. So they can afford it. I figure that's not so bad, right? So if you have a proven business model, why are you doing things that don't work? Except for the random winners. I call that the catch-22. I mean, it kept me doing the same process, trying to fit what I needed to avoid risk and make trading adhere to my emotional needs, not actually developing a process that was aligned with the actual business. So does that make sense? Does that sound like you? You're trying to get this thing to do what you want it to do, get that risk out, create certainty, I know if I just work harder, I can make it better, but you always wake up in the same place. Is that you? Well, that was me. VPOC migration. I'm just going to show you the IB continuation trade. So anyway, we have long, 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 no shorts yet. And if there is a short, if it's in your plan, do your thing. This is support. VPOC migration. Right here is called the IB continuation trade. Now you could be taking it here, break high, 930 is, we have what's called, we take out the first hour's high. Remember, 98% probability to take this and this out and get over yesterday's high. Stops are sitting here, and then it's wherever, right? And we don't know where, but I suspect all-time high, but that's just me. So, but suspect. I can't say it will. I'll say it might, because the best you have is maybe. This right here sets up a continuation long in alignment. So this is a long, and this is a long. VPOC migration, everything says north. So if you took a long here, you're going to be scaling into the stops above yesterday's high. Thanks for playing. They get a coupon to the buffet. 818 buy stops. What are you doing with your stops up here? Did you sleep in today? What is going on? Guys, you getting something out of this? I'm now current. If you have questions, post them. I just want to show you something. What I'm sharing with you is not tons of trades. I'm showing you structured trades that are in alignment with the current context of the market, and it's not frequency of trading, it's the range. How do you get paid? Range. I have found, and I used to be a high volume trader, so it's not that I haven't done it. I have, 100 trades a day, and we all think this is a video game. It's not. You have to determine an edge. The other part is, think about it this way. If your risk is fairly constant, mine is pretty constant. 3 points, it could be 4, it might be 2.5, Sometimes I'm leaving a little more depending on volatility. I am going for range. It pays for the stops we take. Now, the fact is, I take stops, maybe not as many as you, but I take them because that's overhead and cost of production. This is a random distribution of outcomes. Remember, the casinos pay to gamble, so, I pay too. But when I do get on a rotation, my last long, other than ads and a couple other little things, it's way out somewhere, out here. So I'm just sitting now with runners. So I'm sitting back and, this is what pays the bills. 20, 30 points when it's available. When it's not available, it's what the market offers, and then it's trade management, and put your helmet on. Now, we have to continually be aware of the condition. Let's look here. I'm going to show you behavior. Now, these are not trade recommendations. All of this has to be sorted out in your plan. When you come to market, if you ever have to say, what should I do? You don't have a trade plan. The plan is created and vetted outside of market hours. Then basically you just brand. Now, what is the language? What have we been seeing? Chop, 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 too low. Chop, 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 break, support, too low. Chop, 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 break high, support, too low. Sweep. Warning Will Robinson moment for a rotation. Sweep. Volume now is here. Break low, resistance. Need to clear. What are we doing? Not so much. Now what? Now we're going to potentially set up a trade, and this is not a recommendation. Let me throw some structure on here for you, and we're going to observe it together. Now, guys, you take a trade, it's going to be on you. Don't take my trades. I'm not even saying I would take this trade. I'm just showing you structure. I don't call trades. Why take my stop? You can do that without my help. This is support. Notice the stacking liquidity. This is an outside edge of a distribution. If we find our buyers, then the target would be here. So let's see if we get a structure. The volume is, the microstructure is there. This is where support is here, and support is here. Stacking is here. Now we're going to hang out together and we're going to be tourists. Let's watch the microstructure together. And this can do anything. It can come, this is trading, right? Who knows? Anybody got a clue? What do you think? I don't know. Do you? No clue. And if this thing does its thing, what is this called? Mean reversion. Now, it's not necessary. It's not a mechanical long. This is an area to observe behavior. And the thing with mean reversion is, where's the outside? This is a low volume area. I got to turn levels on. And that would be the area to start looking. These are not trade recommendations. There's nothing mechanical. It is levels of interest. Huh? Let's see. Yes, I do. CJ, I do incorporate ETH into my trading. It's very important because it's the last auction. So it gives, that's why the low. Now this out here is an outside edge. It's an important level. So I know I'm looking now, and I don't know. Don't forget, I'm clueless. I take stops. That's why these aren't trade recommendations. I know this is my area, but I don't have anything happening. I'm just a tourist. So we will see, right? So 39.75. This is an outside edge. So what the idea of mean reversion is to come somewhere. This is part of the thrill. And the idea is to come back there. This is the primary trade developing traders need to master. The market is always reverting to high volume in all time frames. So let's watch. I got buyers here. Now I need a triggering structure, right? I do not have a trigger. You know what a trigger looks like. I've been shown it to. But what set up the rotation? This. See, if you have order flow, this is the sweep. This has potential. That's all you got. Counter rotation. Notice what happens up here. Think of this like a hand. Pushing. It's pressure. It's skewing the book. Now, the hand. Like this, if you don't have order flow, it's the invisible hand. But for us, it comes in. Now, notice this was sitting here. You got the reaction. The retail price here is too high. Break, too high. Now I'm coming outside. Now I'm looking for too low. And anything can happen, right? Where's my support? Out in here someplace. 39. And by the way, it's an area. I can just as well get under here. So I know I had my buyers here and my support is out in here. So right here, I am watching very carefully for a reversion long. And if it fires, and these are not trade recommendations, this is the scale in front of there, subject to your plan. Are you guys tracking? Hope you get something from this. This is not a trade, guys. Yeah, hi, Randall. How are you? Thank you. Ben, where does my stop need to be for the long at the IB? I use structure. And again, what I do is not, I can't say do this, do that. I can only say maybe this, maybe that. Throw my arms up in the air and say, I have no clue. I am clueless. Right? I can prove it. Guys, how are we doing? And how are we doing in YouTube? This is called mean reversion. Now, mean is the term, right? So why were we looking here? Great question. Ask it myself. Because of what happened here. My buyers are there, so I had absorption, and look where the buyers came in. There. So where's my support? Isn't it like there, really? Here, with this, and this. And now, but the idea of this is you're trying to get here. And if you can cross over, then you continue along. And this would need to pull or get consumed, Pac-Man. And so we want to see what happens with this liquidity. And the trade really is here. Now, the idea, this is called mean reversion. And I always say to traders in Trader Lab, this is the trade. Because this is the trade you're going to see most of the time. Most of the time, the market's rotational. And if you can learn to understand market mechanics, which is what the Trader Lab is built on, you can then build out an understanding where to anticipate a trade, not where to predict. So how do you trade this thing? Well, now let's look at some ideas. We're looking for the long. The volume is here. The outside edge is really kind of like over here-ish, where it broke away. I'm going to draw a little box here just so you can kind of see it. And this is what I always suggest developing traders do. Now, when I'm looking at this, I see this. I don't have to draw a box on it. But I will tell you that when it scrolls off the screen, I want to know there was something here that's material. So this now, this is outside edge below, too low. This is the retail price. Let's go to the supermarket for S&Ps. If this is on sale and the participants perceive it as too low, then you throw 4 in the shopping cart. Then what do they do with the price? Don't they put it back to retail? Potentially. Now that doesn't mean this will get here. It means it might, because that's the best you have, and it may also come down, test, then go up, or come down, test, fail, and go to a lower level, and then do it again. That's what I know. Louis, with the one lot. Hi, Louis. How you been? Trading markets, what's too much information I didn't see? Maybe there's something else. The levels, Mark, come to Trader Lab. All this stuff is posted in Trader Lab. These charts, everything, actually at either early in the morning around 6:30, 7 a.m. Central Time, I post the higher level stuff. But it isn't what I do. The Trader Lab is a community. I'm just a trader, That's all. Doesn't matter my experiences. I've got substantial experience in trading. But early on, there was no day trading when I started, 1980. You pick up the phone, call your guy on the floor. That was it. And it was trend following, positioning. That's what I did. Short term for me was trading the large S&P, swing trading, 2 to 3 day swings. That was like scalping back then because there was no range. So, if you had a 30-point move in the Dow, you throw a party. And these are the big S&Ps. You guys, if you're trading minis or micros, they're, nada. So the biggies, big dollars. So you didn't need a big move. Anyway, neither here nor there. So my background is really much more, fund manager and all that kind of stuff. So I that's my background. But over the years, as the technology evolved, I kind of moved into, we finally got Globex and all that kind of stuff. And actually, it was Project A in the bond market. So I was trading, before we had Globex. Anyway, neither here nor there. So this is where we're trying to go. And it's not there. It's a couple ticks ahead. This is a specific trade in Trader Lab. It's called mean reversion. That's the mean. And the idea of a reversion trade is just to revert. And the idea also of reversion, if we think the trend is up, and I don't think I'll get challenged on that today so far, unless it changes, all you're going to do is take long continuation trades. This is the primary I call this bread and butter trade. All day, every day, you get these. You can trade, depending on the condition of the market. If it's directional, you trade them from one side. If it's rotational from both sides, you can be short and long. I tend to just go with what I perceive to be the dominant side. I don't care about shorting anything. It's just not in my plan. I'm more of a Barca lounger trader. I just trade with the dominant side. I can use counter trend or these for trade management if, subject to my plan and timeframes, you see. Or I can have my stop way out here someplace for my runners. But for developing traders, you would start with a 2-lot. And the reason I say that is the job of the first contract is to get you risk neutral. So you can then, the worst that happens then, other than taking a full stop on a 2-lot naturally, is that you get risk neutral, and now you're managing your emotions, your fear, your FOMO, because the worst that can happen is you scratch your trade if you get stopped out of your runner and your broker sends you a dozen roses because they love you. That's the worst that can happen. Think about how you feel, and I'm using the term feel very specifically, when you have, let's say you're long. You have this, euphoria, you see this, and you want to bail out. It comes up here, euphoria, you see this. Oh my God, I don't want to get stopped out. And you bail out here. Anybody here do that? Raise your hand. Mine's up. Is yours? Be honest. Yes. If you haven't, come to Trader Lab, clue me in. But emotional stimulus hijacks your intention. You could have a trade plan that says, I'm not going to do it this time. I'm not going to bail out. I'm going to hold this for infinity. And then what do? You get out here. Why? That's all emotional triggers, and that's psychology. You need to understand it. You also need to understand the tools that you can create to take back control of your own future and not put it in the hands of a lunatic who's I call Hyde. Fight and flight is wired to avoid risk and uncertainty. Is there a saber-toothed tiger behind the rock over here? Well, is there a saber-toothed tiger right now? Fear, uncertainty, get out, right? Am I going to get stopped out? I better get out. Uncertainty, saber-toothed tiger. How do you manage it? Get risk neutral. Then hang out. And whatever happens, happens. That's trading. So the tools are not only the structured trades I've shared, it's the psychological tools to manage the things that disrupt our intention. You could have the best intentions on the world, and when you're in a perception or you're experiencing fear, it's gone. Trading is uncertainty. Now, here's the other thing, and just a little tidbit, because we talk about this all the time at Trader Lab, is when is the risk the lowest? This is an interesting question. And if it was a multiple choice answer, you're going to say, well, when my indicator crossovers, when I'm certain, when the market started moving, all this, right? Is that when the risk is the lowest, or is it when it's the greatest? Here's something just to challenge your thinking. Think about those. When it's most uncertain, the risk is the lowest. When it's certain, the market's already made its move, and the risk is the greatest. Because either trade can fail, right? So for me, I had to change my beliefs and my needs. My needs are to have an organization of trades that I've vetted. So now I'm trading a statistic, and I want to be able to get in the trade as quickly as possible when my structure triggers. Now let's assume I can't get in this trade till here. There's my structure. Too high, too low, retail. Break high. This is an outside edge. This is an outside edge. Buyers. Notice the buyers. Where's my support? There, and under here. So if I get long, I've got to try to get in front of here. And if it falls under here, then troll. That's it. Then it's just get risk neutral, take a deep breath, then get back in the barca lounger. With this trade, if I took this long, I'd have anxiety. I'd be going, come on, and then I'd be depressed, then I'd be euphoric, then I'd be worried, right? Is that you? It's all of us. How do you deal with the emotional stimulus and the uncertainty? Trade plan, statistical probabilities, and accepting that every trade has a random distribution of outcomes, same as the casinos. Every hand has a random distribution of outcomes, but they play that game because they have an edge. It's not the outcome of this trade, which is we live and die on. It's the outcome of all these trades. And that's where you extract the edge. The edge is tangible. The emotions, euphoria, depression, euphoria, oh my God, is emotional. We're not in the business of emotions. We have to manage emotions. The only tool I've found to manage emotional states and triggers is a plan and an edge. By the way, we're outside of yesterday's high. Isn't that something that's worthwhile? And what's this called? Reversion trading. This is the mean. So the idea is to hopefully get there before you get there. That's as deep as this is. Now you sit back in your barca lounge or bite your nails and wait for your scale, depending on what your trade management is. And then this is where we're looking. And it could take forever and it may never get there. Somebody might tweet, trip over a wire at the CME. I remember one time I was trading and the actual CME went down. Their servers, the whole thing, their server farm went down, which are outside of Chicago. And how would you like to be trading big S&Ps when that happens? There's indigestion. You guys have questions. How we doing? Randall, you started in 79. You were there for the Hunt Silver Crisis. That was an amazing time. I started in 1980, and I saw the Hunts cornered the silver market. Gold went to $7.50 an ounce. Silver went to $50 from like $2. And then the exchange changed the rules where it was liquidation only. It was unbelievable. You remember that? That's when I was new in the business. My jaw was on the floor for a month. How to get a large scale trade, Amagoya? Well, if you're talking about range, it's really the market. It depends on the day and the structure. Given where we are and what we've done, and it doesn't mean it's going to happen today, not really. By the way, this was the short target. I should say the long target yesterday. This was the short from the day before down to there, which is the support. Yesterday, we cleaned out the stops under day before and then reversed out, came through, got the stops here, and got the next target. So I didn't get all of this yesterday. I got a nice piece of it, So, just the way it is. So let's watch. Outside edges out here. Support's going to be in this area, out in here. High volume is sitting here. This is like a support area because there's volume. And this now is your outside edge in this distribution. So this is an area of support. And if it falls out, then low volume. Remember, we were talking about 39.75 this thing. So let's see. We are outside yesterday's range. The retail price is here. So far, this is our magnet. So far, this is our area of support, this out here. So this is our, so we got to watch this. Let's watch together. The thing about having a trade plan and all that and being in Trader Lab is you already know what you're going to do. You don't know what the market's going to do. That part we haven't figured out because that's called predicting. I have no clue. What I know is what the participants told me about this. I know the buyers are there. That's absorption. And I know the sellers were there. See them? And the buyers are aggressive. So if these buyers think this is a heck of a deal, if we come out here, it's possible that they're going to go, oh, really? Let me throw some more in the cart. And then we come back here. That's the reversion trade. Now, what it does, random. So let's see. Are you guys following? How we doing? Please give a like in YouTube if you find something interesting here. You can also use the link in the bottom of YouTube if you want to visit the Trader Lab. There's no cost for it, but it's a serious community. It's about the business of trading. It's not romper room. And it's a mutual support system. You know, it's not about me. This is really about you. I'm just a trader. Fortunately, I've sustained myself through thick and thin. 87 market crash, currency crises, 9/11, Desert Storm, and tons more. I can't even remember them. And of course, the silver crisis in 79-80, when we had rampant inflation in 79, and then 82, or whenever it was, 81, maybe it was even 80, I can't remember. They raised the interest rates up, that squashed the inflation, and they just really fried all markets and created a recession. That was Paul Volcker. Any of you guys remember that? Probably before you. Let's watch our outside edges. So we're looking, let's see what we got going on. Let me look a little bit. So we are still okay so far. And again, I always have to say, what's okay for me might not be okay for you. The outside edge is still this. So we're going to want to keep an eye out here. And by the way, if it comes out here, this is not a wall. It's an outside edge. And what you have at outside edges are stops under here. So that's why this is important. And of course, this is important. This now is a weak low. So this is like a double bottom, weak local low. So I know the possibility, and it's not a prediction, right? I can't predict anything because I don't. I know that if I come back here, and there's buyers here, that I can take this out, do an inventory grab, and then come back across the range. This is why this is an outside edge, and it doesn't mean anything. It just means, yeah, this might happen. But let's talk about what we know. This is a double bottom, isn't it? What's a double bottom, guys? Strong or weak? Weak. I know, I can't wait for your answer. It's weak. Why is it weak? Because now retail traders like us have their stops here, and if we get buyers here, they're going to put their stops here. So I got stops piling up here. This tells me don't get long. This, if I'm not long already, it tells me that I can come under here, and then it makes my long even better. Now, subject to your plan, this is where you're trying to go. In the Trader Lab, the idea is to get risk neutral. This is trade plan specific. And where your stop goes is trade plan specific. Let's extend this. So we have our structure sitting out here and our location. Location. Think real estate levels. Weak, low. Watch. Now, we're going to look. We're going to look and see if we get a sweep, any kind of stop pick, as I call it, and we're going to look for an outside edge, 39.75-ish, and it can go under there because there's going to be stops at and under that level. So 38, 39. Here. This. Let's watch. Not a recommendation, guys. Tourists. So that was your week low, local low, no bueno to get long. Now we're going to watch. Here's our level. Now, if you got long here, I have no problem with that. You always have to get risk neutral. If you didn't get risk neutral, then you have to have a trade management or you take a stop. That's as deep as this gets. For me, my stop is not going to be here. But that's just me because I know what I got here, right? Let's watch. So this I know because this is where the outside edge is. So this is now an area to observe. Let's look at what we got here. So I got my stops came out. I have buyers here, and there's a buyer. See them? Now, where was the support? It would be in this area. Now, it's just a matter of being a tourist. Let's see what happens. Not a recommendation. Microstructure. It needs to break high. This is your support. You got your sellers here, your sellers here, your buyers there, your buyers there. Not a trade recommendation. Watch. Let's just see what it does. The thing with mean reversion, guys, and I always, the little joke is it's mean because you're trying to pick an outside edge. So that's the challenge, This was and is, remember, 39.75. We talked about that. That's it. So that's your outside edge. If you got involved earlier, you get involved. And if it's not cool, then that's life. This is your outside edge, and that's your mean. So this is the reversion, okay? So let's just watch it. These are not trade recommendations. This is just trading. I don't know. Like to say, yeah, there's no mystique to this. There's nothing complicated about this. I know everyone used to say, boy, trading is really complicated. And my thing is, no, it's not complicated at all. It's just random. Isn't that different? So if we can understand how the market works and then wait, then we have over time, if that actual trade has an edge, then we wait for the opportunity to participate. And we accept that we're going to take stops. That's all I can tell you about it. So where's our outside? It's here. And where's our support? It's right there. So let's see what it does. Not trade recommendations. Support, right? Now we got to clear, if it clears this there, if not, lower. That's as deep as this is. Not a recommendation. It is what it is. This is called trading. We take risk. And I don't call trades because what's the point? What the objective here is for you guys to see that if we vet trades, that we might develop an edge. And then if we develop the discipline, that over time, with an edge, and you have to extract it and develop the confidence that you actually have a tangible edge, you can then better manage your emotional states, which is looking for certainty, fear, and the rest of it, right? We have JJ Marks in the Trader Lab. He's a psychologist. JJ, move that therapist couch into the Trader Lab. I've never seen a couch in the chat, but let's try it. We talk about psychology a lot. And the reason we talk about it, it's the reason most traders fail. I believe anyone who comes to Trader Lab can learn how to trade if they do the work. And here's the other thing. We all think that this is a business of setups. Give me more setups. And, I remember one time I was working on 32 different setups at one time. Believe me, that was a bit mind-boggling. And this is early on when I built trading systems, a lot of other things I did. But the real thing is, if you can't trade one, you will trade none. The idea of this mean reversion trade that I'm talking about here is to learn it and understand why it might work, not the outcome of this trade, why this concept and the behavior of the auction reverts back to the mean. And the problem, of course, is, will it do it from here? No idea. Would it do it from here? No idea. But this is the same trade. This is a reversion. This is a reversion from further out with a better location. The same trade. And if it's going to work, it's going to come back here. If it doesn't work, it's going to get under here and throw more under the bus. So the way to do this, proof of concept, if you're going to build a business, let's say a manufacturing, wouldn't you do a pilot program and prove to yourself that you can generate a net, that you can produce a product in a cost-effective way? Well, when we're trading, it's a product. And the product is a profit. And the product actually is an edge, if you think about it. Can we produce and execute an edge? And we're going to pay expenses, which means pay to gamblers, same as the casinos. Do you have an edge? And you will pay. So you will pay. So you got to get over that part. So the proof of concept is that you can replicate process and prove to yourself and work out the kinks of your psychology to actually be able to execute this in spite of what happens, like on this trade. Yeah, so what's going to happen on this trade? I can't tell you what will happen. I don't have the ability to predict anything. My ability lies in my understanding of how the market works and then building out a plan that has an edge. So all I've had is longs today. So far, no stops, and that doesn't mean anything. It's because there are days I take no stops, and there's days I don't have a winning trade, or maybe one or two, and the rest are not winners. What is the difference? Well, if my plan is anchored and constant, then what is the difference? Is it me, or is it the condition of the market and the plan that the condition is aligned with? So let's see what goes on here. I'm still seeing selling in here, so it's profit taking. So let's see what we get. Our 39.75 is still out here. The thing about trading, there's no precision. I think that's probably the part that makes us nuts. Because so you have uncertainty and no precision. So when you're operating in uncertainty, it is the hardest thing. It really is. Because you're always going to go, should I buy it here? Should I wait for this? What should I do? See, in a random environment, you won't know what you should do until you have the benefit of hindsight. And then the lunatic under the hood is going to say, well, you should have waited. Right? Well, what I find is I don't know. I have to follow my plan because I have no idea what the market will do. So I can't do anything about that. I have to follow my plan. Now, if my plan says my stop is under here, I take a stop. I go, wow, that was interesting. Did I follow my plan? If the answer is yes, then that's it. So now this is our pick. And if this is going to go up from here, I'm going to be doing it from this area. After that, if it falls out under here, then it's going lower. So that's pretty much it. So if you were taking longs, you took a long here, depending on where your stop is, you would take a stop. If your stop is further outside the structure, and this is where the structure is, out here, and remember there's stops under here, then this is really my protection, this little thing right here. Matter of fact. And if you look at the order flow, there is also liquidity sitting under here. Here, let me show you. Location, liquidity. This is where the stops were, right? Low volume, outside edge. I did point this out. Now, the fact I pointed out doesn't mean anything. All I know is I don't know if when we have this behavior, if we're ever going to get outside. I do know that I can pick these guys off, which is where this is. So the optimum thing, now if I'm taking longs anywhere around here, I know this is the outside edge. That's what I know. This is where the auction helps you. Now, if you take this long, your stop's got to be further away. You take this one, your stop's got to be in the same place. You take this one, you're better off. And now you're trying for this. It's the same trade. And I will tell you, if I take a trade wherever and I get picked off, I'll put it back on again. As long as the structure's still intact. And I'm still going for this, not trade recommendations. So this is the real world for me. I'm not saying it's right for you. I'm just saying it's a method. And then it's location. Trading is like real estate. Location, location, location. What does it mean when it comes out here? It's because there was urgency and we ran away. It's a swing. What is under swings? Well, stops are there. Remember, we had a weak low, so that was no good. We have this one. There's going to be stops under here, and there's going to be stops out here, which is where the outside edge is. So this is a long. That's a long. That's a long. That's a long. But remember, as you're getting involved here, you've got more risk. So when I get long here, I'm still working on this. And I had my sellers. Let's go into a little more micro. Let's look at this. My sellers were there. So if I put this trade on, I'm going to be looking here and there. And this, by the way, this is the same as that, but a fractal or a different time frame. Is everybody with me? I only got a minute left. Please give a like if you're visiting in YouTube. Don't forget the like, and if you want to visit Trader Lab, there's a link down in the bottom of YouTube. There's no cost for it, but it's only for serious traders. It's not romper room. It's about business, and we keep it that way. There's a lot of talent in the Trader Lab, and it doesn't matter how long you've been trading or even what you do. What matters is bring it. And the idea is to leverage our collective experience so we can all get better together. And by the way, if you're interested, there's a lot of additional education, stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, algorithmic behavior, tons more. Next, target, and then trade management and potential to take out the all-time high. And again, not a recommendation. Thanks for visiting Trader Lab, guys. Appreciate you taking the time. Hope you got some value. Visit the Trader Lab community. Use the link in the bottom of YouTube. You won't be solicited, harassed, or anything, and you'll probably find that the Trader Lab might be one of the best times you spend in your personal development on your journey. Take care. I'll see you guys tomorrow.